So first of all, thank you very much, Professors Goodhart and Baltensperger, for your introductory speeches. Geschätzte Damen und Herren, wir haben jetzt etwa 35 Minuten, um das Thema gemeinsam in der Diskussion zu vertiefen. Wir werden dazu hier begleitet auf der Bühne von Alexandra Janssen. Sie ist CEO von Ecofin Portfolio Solutions und von Ivan Adamovich, Mitglied des Stiftungsrats und CEO der Private Client Bank hier in Zürich. Erlauben Sie mir zunächst eine kurze Vorbemerkung. Professor Goodhart war natürlich viel zu bescheiden, um sein eigenes Buch zu bewerben. Ich möchte ein kurzes Zitat aus dem Vorwort des Buches vorlesen, das 2020 erschienen ist, The Great Demographic Reversal. What will happen as the lockdown gets lifted and recovery ensues following a period of massive fiscal and monetary expansion? The answer, as in the aftermath of many wars, will be a surge in inflation, quite likely more than 5%, and even in the order of 10% in 2021. Das war im Jahr 2020. Das war eine outrageous prediction at the time. Aber es soll niemand sagen, dass man das nicht hätte kommen sehen. Meine wärmste Empfehlung, wenn Sie das Buch noch nicht gelesen haben, lesen Sie es. The Great Demographic Reversal. Ich habe Professor Baltensperger, Frau Janssen und Herrn Adamovich eingeladen. Die Diskussion wird in Englisch sein. Ich habe Sie aber alle eingeladen, wenn Sie etwas präziser benennen möchten oder Ihnen gerade die Worte fehlen, Sie können immer auch auf Deutsch wechseln. But now I'll switch to English for the discussion. Mrs. Janssen and Mr. Adamovich, to bring you into the discussion, from both Professor Baltensperger and Professor Goodhart, we have heard the answer to the question of the podium. Are central banks causing inflation? They say, no, they're not causing it, but both of them say they have failed in preventing the inflationary pressures that we see today. Mrs. Janssen, you first. Would you agree with that? And do you have additional thoughts on that topic?
So I definitely agree that the central banks didn't prevent it. They are, as you formulated it, responsible for what happened, but I would say they, to a large extent as well, caused it. In my view, we have heard a lot about real developments in the economy, demographic changes, technological advances, and so on, that greatly change our societies and our economies, but in my view, that could as well happen in a barter economy where you don't have any money. So the first order effects of those aspects, in my view, are the real economy. And above that, you have the central banks that are responsible for the monetary policy that optimally fits that real economy. And in my view, they are responsible for that, but more in the time that from 2020 and onward, they created a policy that caused inflation, in my view, extending the monetary supply, not only the base money, but as well broader monetary aggregates.
So just a vast expansion of the monetary supply, which caused inflation.
Yes.
Mr. Adamovich.
Yes, I'm closer to Alexandra than to Charles, I must say. Of course, it can be just a semantic difference. You know, if you say they didn't prevent or did they cause, maybe it's the same thing. But I think, and I agree with what you said, Ernst, in the short term, it's not central banks who are creating or causing inflation. There are supply shocks, there are demand shocks. I mean, we've seen many of them. But in the long term, and in the long run, of course, Keynes would say we're all dead, but in the long run, I think they have been responsible, and if you say they're responsible, you can say they're causing inflation. There is such a phenomenon as monetary inflation, and I believe that we live in a society, and we've been living in a society not only for the last 10 to 15 years after the financial crisis, but even before. I mean, the term, I'm a practitioner, so I'm an investor. The term Greenspan put was created much before the financial crisis. And if you are active in financial markets, you notice that practitioners, investors are always betting that in the next crisis, when the next problem turns up, central banks will help us, will bail us out with going down with interest rates and so on and so forth. So I believe, and that's actually from a political economy point of view, I believe that we are living in a society, and Ernst, you alluded to it, that sort of it's easier to sell cheap money than to sell expensive money. We are living in a society where we are addicted to cheap money, and this addiction is very strong, and central banks and central bankers have to be very strong if they go against society who actually demands cheap money. And we've been doing this for a long time. So I believe, yes, they are responsible, and to a certain extent they caused inflation. Of course, maybe not in the short term and things up and down, but the underlying thing is we have been living on cheap money for too long, and we're living in a bailout society. It's maybe not only central banks, it's maybe even society being responsible because we like to be bailed out.
We'll come to that addiction in a minute. Professor Baltensperger, you have showed in your last slide that the monetary policy of the last 10 years was very important, or it's important to acknowledge that monetary policy of the last 10 years to understand what's happening today. Now, isn't there something like a boy who cried wolf dynamic when we look back to the global financial crisis or the aftermath of it? Many people then said, oh, this will be inflationary, the quantitative easing and so on. And central banks then said, look, we did it and it was not inflationary, therefore we can do it again. Yeah. My question really is, what is different today than in the aftermath of the global financial crisis?
That is indeed an important problem. I mean, what you just mentioned, it is true that many people predicted after the financial crisis and the monetary expansion which followed it, that this would soon lead to increased inflation. And that was too simplistic a view. Yeah. And it is clear, I mean, if you really read the monetary literature, it has always been clear that there is not such a tight nexus between money creation and inflation as was suggested there. And I also, I mean, Milton Friedman is always quoted in that context. I don't think that Milton Friedman would have implied that. To other monetarists, they were very well aware of the fact that, as it is often expressed, the velocity of money can change very seriously. Actually, Friedman and Schwartz have documented that for the 1930s. So it's wrong to say, well, they would not have understood that. But it's still true that there was an expectation, maybe a mistaken expectation on the part of many after the monetary expansion following the financial crisis that this would soon lead to much inflation. Now, it's not easy to explain exactly what happened there. I mean, one thing is of the points I've mentioned before. Another thing, in my view, is that it's a bit a pet theory of mine, maybe, but that I believe that, I mean, this course that the central banks have followed over the last 10 years, it has always been clear that this would not be a long-run, feasible, sustainable policy. It has always been, I mean, to any person who is right in his mind, this must always have been clear that this would not be possible. And therefore, there was always a certain uneasiness about this kind of policy. I think it was not the policy which really has built confidence, long-run confidence, maybe short-run confidence, but not long-run confidence. And my view is that this is detrimental to investment and also consumer spending to a certain extent, but in particular to investment. You need long-run reliability for investments to prosper. And the monetary policy of the last 10 years has never really offered that. that is my favorite explanation of why there has been no immediate inflation. But you are right, of course, that this has sort of inspired many central banks, but also many central bank observers to say, well, there is really no problem. There is the inflation you have predicted in the past. It's not there. Therefore, then this view, I have alluded to that in the beginning in my talk, this view upheld by many that in these days, today, inflation is governed by other factors, not so much by what the central banks do. And they can use their instruments to achieve other objectives, financial stability or climate politics or whatever.
Now, Professor Goodhart, an important part of this mantra, or the monetary policy after the global financial crisis, was to prevent a deflation at all cost. Ben Bernanke was adamant that he wanted to prevent a rerun of the 1930s. Therefore, they did everything to prevent a deflation and said, you know, when inflation comes, we'll deal with it. Now, in your view, was that just plain wrong, this fixation on preventing a deflationary spiral?
Well, he reacted to what had happened during the past 20 or 30 years. And I think that he really believed that inflation would never come back. I think that the mainstream of economists were not like Ernst, not like me, who think that inflation is always possible. They thought that simply because it had not happened for such a long time, it would not happen in future. I must say, I do admire and thank you all for speaking in English, simply because I'm not very good at German. This would be impossible in the UK. Absolutely. The idea that we might have a conference in any other language, it couldn't occur. Could I just take a moment to quarrel slightly with Alexandra? It's a question of what you mean by cause. I think in order to say somebody has caused something, it actually means that they wanted that to happen. There has to be what I think in Latin is described as mens rea. They wanted it to happen. I don't think that the central banks ever wanted it to happen. Now, the policies that they followed were based on the assumption that inflation would be very short and wouldn't be too high, and then they would get back to lower for longer. And because of that mindset, they allowed monetary growth, quantitative easing and so on, to continue to an extent that was part of the reasons why inflation took over. But to say they caused it, in my view, implies that they wanted it to happen. And they didn't want it to happen. It happened because, as I said, I think that they forecast wrongly, and they didn't understand the basic long-term trends that were affecting the economy, and that it were in the process of changing dramatically. So that's why I would differ from you. It's a semantic point. What do you mean by cause?
Yeah.
Would you like to reply? Did they want it to happen?
Because I don't think they are evil and wanted inflation to happen, of course not. But I think there are often conflicting goals, even if the single goal is price stability, but there are always trade-offs for central banks, especially in the US. And in these trade-offs, I think they decided, or they erred on the wrong side. And they are responsible in causing it with their monetary policy.
It was a forecasting error, in my view. It was not that they believed too much that they must, support employment at all costs. They just didn't believe that there was going to be a problem of inflation. It was only going to be temporary. Transitory was the word that every central banker used. including in this country, no doubt.
Even first, and Professor Baltensperger, short please, because I don't want to waste too much time on that semantic issue.
Yeah, but I'm not so sure, Charles, if they didn't want to create inflation. Because, I mean, at least if we look at Japan, and I think you even said it in your presentation, their goal was to create some inflation.
Yeah, good point.
Right? And that's sort of the first element. And the second is, I'm not so sure if sort of in light of the high debt situation we have in Japan, but also in many countries of the European Monetary Union, even in the US, if central banks are not, and I'm interpreting and I'm being very cautious and all that, but are not maybe interested in creating some kind of negative real rate to make the debt burden lower and lower in the sense of an inflation tax.
Financial repression.
However you call it, there's many ways to say it, but I'm not so confident that they didn't even want to cause inflation. So I would be again closer to Alexandra.
Okay, I mean, to this point, I don't see much agreement, much difference, much disagreement between what I think and what Ivan and Alexandra Janssen said about this. I really think, I mean, to me, this is a semantic issue. I think it's not useful to debate about whether central banks did cause or create inflation. I think the useful question to me is, did they do the right thing or did they not do the right thing? And as I've tried to make clear in my talk, they did not do the right thing, except the SNB, of course. But,
we agree with this.
I mean, that was the message that I tried to convey in the last part of my talk. I think they did conduct a monetary policy over the last 10 years, the last decade essentially, which has created lots of problems for the current time, which even if it didn't lead to inflation during that time, has the potential now to damage strongly the anti-inflation policy of the central banks under current conditions.
Now, when we look forward, and I think that's the key point that you, Professor Goodhart, made, and also you made, Professor Baltensperger, was that, yes, of course, now, today we have transitory, cyclical, noisy effects, but underneath are structural issues, structural pressures that call for a multi-year period of structurally higher inflation than what we were used to in the past 25 to 30 years. Maybe first, just to gain a consensus on that, would you both agree to that? No. Good.
No, but
what's your view on that then?
I have a difficulty with the term of structural inflation because I see that we have an economy that has a structure and that structure is greatly changing in the next decades, and demographic changes we can predict, I agree, to a large extent. But then there is the nominal level where we have central banks responsible, and it's their responsibility to adjust the monetary policy to the structure of the economy. So for me, structurally higher inflation is just an excuse for central banks not doing their job. So the structure is in the economy, not in the inflation, in my view.
Ivan?
I'm less confident regarding the ability of central banks to control these things.
Yeah, that's a different, it's their responsibility.
So that's why I would expect, I would agree that we would have a structurally high inflation just because of the incentives for most central banks in the world and sort of that they are not being as independent as our central bank here. I would expect a structurally higher inflation for whatever reason. Central banks might have the tools. I'm not even so sure about that. I'm not an expert, but and they have incentives so that we will see a structurally higher inflation. That's what I would think.
Maybe just to be clear, I think no one calls for inflation that to quote Irving Fisher, to stay on a permanently high plateau. I mean, you all said it'll come down, but there will probably be just structural pressures underneath it. That, if I understand you correctly, Professor Goodhart, even if central banks now engineered a recession, this will not kill these structural pressures that are underneath it, correct?
Yes. Yes. And growth is going to slow unless we're extraordinarily fortunate with great technological advances. And I think the argument is going to be, with growth slowing and people wanting to restore their real incomes, why struggle harder to bring inflation down with it, restricting the economy? And after all, 3.5% isn't that much worse. And indeed, there are many. Olivier Blanchard is arguing for a 3% target anyhow, on the grounds that he thinks that deflationary pressures will come back, and that having a target of 3% would be much less likely to make monetary policy ineffective or less effective because of the lower bound to nominal interest rates. So with quite a large number of mainstream economists arguing for 3% anyhow, my expectation is that the political, social, and even maybe sort of analytical economic arguments will mean that it will be extraordinarily difficult politically and for other reasons for central banks over future years to actually go on pressing to get inflation significantly below 3%. I think it will bounce around 3, 4, 4.5.
I mean, that narrative shift is clearly happening. Does that worry you, that kind of the inflation target or the idea of what is acceptable as a level of inflation is kind of shifting up slowly to 3, 3.5, 4%?
Yes, it does worry me. And I think even the fact that these days 2% inflation is sort of universally considered as representing price stability worries me somewhat. I think, of course, in Switzerland here we differ a bit with that. We had a concept which I still consider very reasonable, which is different. We said, when this concept was introduced in Switzerland, well, there is a measurement problem with inflation, and according to the general view, I mean, most economists did hold that view at that time. Actual inflation somewhat measured inflation somewhat overstates actual inflation. The estimates were 0.6% or something like that. We rounded up and said, well, let's say 1%, that we can accept that 1% measured inflation is really price stability because of this estimation problem. And then at the same time, we know that we cannot even measure and control inflation. We cannot control inflation exactly. We cannot even measure it exactly. So there must be a boundary around that. Let's say plus minus 1% on each side. So that gave us a range of 0 to 1%, in the middle of between 0 and 2%, in the middle 1%, that we say that we consider as representing price stability. That's a concept that I can still share. The SMB still holds that view. The ECB, incidentally, did define price stability in pretty much the same way initially. It had the same concept, essentially. But then over time, suddenly it was not a range between 0 and 2% anymore, or it was at 2% or lower, but excluding deflation. You know, that gives you a range between 0 and 2%. Then over time, this was gradually adjusted upwards to close to 2%, and now it's more or less exactly 2%. I never really thought that that was a reasonable change by the ECB. And the main argument, and of course with other central banks, is the zero lower bound, that you lose control of inflation. Well, I'm somehow I always doubted that this was a really very meaningful problem. But so I'm concerned about that, indeed.
Now if we assume that there will be a period of structurally higher inflation, if we assume that there will be a fudging of inflationary targets upward, that would mean that interest rate levels would need to rise as well. Markets will want to be paid for that shift. Now the question is, to you, Ivan, can the financial system even cope with that, given the fragilities we see in the financial system already? Can it cope with a higher interest rate level?
I think it's always a question of how fast these changes come along. So I would say, yes, they can, if it's not too fast. And I mean, we've seen last year and everything what happened now with the banks in the US, Silicon Valley, and so on and so forth. That was probably a result of this very fast interest rate hike. And these interest rates, which go up very fast, will create problems in the system. But I'm not so pessimistic because I think financial markets can adapt. Investors will have to be prepared that sometimes they lose money, they won't be happy about that. But I'm not so pessimistic. I think we're not in front of any kind of the end of the world, and financial markets have been adapting over the last many years, yes, with crisis, one after the other, and so on and so forth. But crises are also a sign of this adaptation. So it's not to call out the end of the world. We'll have difficult times ahead, yes. There will be banks going belly up, there will be central banks intervening, governments intervening, and so on and so forth, but that's part of the adaptation. So, yeah, we have to cope with this.
In my view, it was, yes?
Could I just come back quickly, just briefly to the issue of monetary inflation and structural inflation, because I couldn't say anything about it before. In my view, it is clear, and here I think I fundamentally agree with Alexandra Janssen that monetary policy, central banks are responsible for the long run course of prices and inflation. That's what I tried to say in my talk also. But at the same time, we have a lot of structural shocks. It can be supply shocks, demand shocks, which affect the short-run behavior of prices. And in my view, what is important is that these short-run shocks, depending on which way they go, can make the task of monetary policy easier or more difficult. In the last 25 years, they have made it easier because all these shocks have been essentially price dampening, which means you can maybe express it this way. Central banks have always been able to be a bit more expansionary because of that than would have been the case otherwise, without causing inflation. And in the future, I think, and this is essentially the message of Charles' important book, in the future, things will be different. It will be probably the other way around. So this will make monetary policy, inflation policy for central banks more difficult. They would probably have to be a bit more restrictive than they would have to be otherwise. And they don't want to be that, they don't like that. So this together, to me, translates into a forecast that inflation probably will be higher in the future than it should be and than it has been in the past.
One sentence. I think it's good that money has a price again, because for financial markets and for markets overall, in general, money needs to have a price. So I'm actually more confident for the future. I was much more worried when money didn't have a price.
On the topic of fragilities, Alexandra Janssen, obviously we've had a decade of very easy money, where money didn't have a price for several years. Now, and we know from history, whenever interest rates are too low, people take debt and do dumb things with it. Or as Walter Bechet once said, John Bull can take many things, but he cannot take 2%. When you look at the system, the financial system, the levels of debt out there, where do you see the biggest fragilities, or what worries you most?
So Christine Lagarde from the ECB, she answered to a similar question that there was no trade-off at all between financial stability and fighting inflation. And I think this is wrong. I mean, we're already seeing the trade-offs and the problems that it is causing. And I think it's always a question who is exposed to interest rate risk. If you look at balance sheet of companies, of banks, of pension funds, of investors, who has a problem on the balance sheet matching the interest rate risks? And there we see, of course, banks who have short and long run a lot of interest rate transformation risk that they're taking on. So that's definitely an issue. With the debt, I see it, as you said, it's not an issue that will come up in the very short term, but it's more a question of who is actually holding this debt. If interest rates are increasing, there is a repricing of those assets, and the people who are actually holding those assets, they will be the ones who are hurt in the short run, and that's what we're already seeing right now.
Professor Goodhart, I mean, we've talked about mandates, central bank mandates. Now, you wrote in a recent piece that central banks are actually having a trilemma or an impossible trinity when it comes to their mandates. They want to keep the economy growing, they want to keep inflation under control, and they want to have a stable financial system. Now, we've seen in the past fall a blow-up in the UK gilts market, which the Bank of England stopped by going all QE again. We've seen Silicon Valley Bank, which the Fed stopped by going all QE again. Now, my question is, are we seeing today already that the financial system is forcing central banks to maybe take a step back from fighting inflation and keeping the financial system intact?
I'm actually less worried about the financial system than about the fiscal position, as I tried to say. And my worry is particularly about the very high debt ratio, and under present policies, the increasing debt ratios of almost all our countries. We used to have, and some people still have, a view that government debt is safe. I have to warn you that the idea that government debt is safe is going to disappear with history. It's going to disappear because the kind of problems that we faced with the pension issue, the liability-driven investment in the UK, I think are going to become much more common. And the effect of that is that I think there's going to be concern about not only the interest rate risk, but an increasing number of countries, not excluding some of the biggest, the question about whether the debt is necessarily always going to be repaid or repaid in nominal terms that aren't too different. In other words, I think that there is a concern about, a wider concern about debt sustainability, that the structural trends that we have in our economy are going to be going to keep at the forefront. Debt sustainability is a phrase that is going to be increasingly used. Does your country or country X, is their debt sustainable with their political and economic condition? And this is something that is actually quite new. And because it's new, we're not used to it. Because we're not used to it, we don't know how to tackle it. And this is, I think, going to be a major issue that you are all going to have to face over the next 20 years.
It's probably safe to say that one should read some unpleasant monetarist arithmetic again.
Yes, I'm afraid so. And people, economists like Cochrane, who argue this line, I think, and it used to be ignored as a kind of intellectual sideshow. It's not an intellectual sideshow any longer. It's going to be up and forefront. And of course, one of the problems is that it's long-term and structural. And that means that any democratic government can say, I will deal with it after the next election, because you don't actually have to deal with it immediately. It's not an immediate problem. It's a long-term pervasive problem. But because you can put it off politically, an awful lot of countries are going to find that they do put it off politically. And even some of them with debt ceilings are going to actually maybe bring it on themselves quicker than you might imagine.
We have to come to a close here. Unfortunately, we could dig a lot deeper. It's probably fair to say in wrapping up that the challenges will remain high and there is not really an easy way out of the predicament we're in. First of all, please join me in thanking Professor Ernst Baltensperger, Alexandra Janssen, Ivan Adamovich and Charles Goodhart. Thank you very much for being with us today.
Thank you. Well, thank you.
And I'll hand it over to Gary Schwartz now.
Danke, Marc. Ja, meine Damen und Herren, bevor ich Sie in den Aperol-Risch und angeregte, vielleicht manchmal etwas depressive Gespräche entlasse, folgt noch der angedrohte Abgesang mit einigen, den meisten von Ihnen vertrauten Ingredienzen. Zuerst die Erinnerung, falls das bei Ihnen untergegangen sein sollte, doch die finanzielle Unterstützung für uns nicht zu vergessen. Es ist nie zu spät. Übrigens können Sie statt der Standardjahresbeiträge von 250 Franken für Einzelpersonen, 400 Franken für Paare und 1000 Franken für Firmen auch etwas mehr einzahlen, wenn Ihnen danach ist und Sie unsere Arbeit für unterstützungswürdig halten. Wir sind für all solche Zeichen jedenfalls sehr dankbar. Dann der Hinweis auf unsere nächsten Aktivitäten. Am Montag, den 26. Juni, führen wir im Zunfthaus zur Waag. Ich sage das für jene, die heute nicht rechtzeitig hier gewesen sind, weil sie in der Meise waren, wo wir normalerweise sind. Also bitte die Einladungen lesen. Im Zunfthaus zur Waag einen Anlass mit dem neuen, kleinen und feinen Think Tank Liber Ethica durch. Beginn ist um 12 Uhr. Wir beschäftigen uns mit Environmental, Social and Corporate Governance, kurz ESG, zwischengesellschaftlichen Ansprüchen, ökonomischem Nutzen und Fassadenmalerei. Nach einem Einführungsreferat von Frau Professor Michelle Sutter-Rüdisser, Direktorin am Institut für Finanzwissenschaft, Finanzrecht und Law and Economics der Universität St. Gallen, werden Beatrice Acklin-Zimmermann und ich im Gespräch mit der Referentin und den Teilnehmern das Thema vertiefen. Unsere nächste Economic Conference wird voraussichtlich am 18. September stattfinden. Es wird unter dem Titel Energiesicherheit, Knappheiten, Technologieverbote um Energiepolitik gehen. Und einen Redner haben wir bereits fix gebucht, nämlich den früheren ETH-Rektor und Präsidenten Lino Guzzella. Wir sind noch auf der Suche nach jemandem aus den USA oder aus Großbritannien. Selbstverständlich werden wir Sie zu beiden Anlässen rechtzeitig schriftlich einladen. Wie immer zuerst unsere Gönner und Förderer, dann, sofern noch Plätze frei sind, weitere Personen auf unserer Adressliste. Zu unserer Tätigkeit gehören auch Publikationen. Wir werden in Zukunft weniger dicke Bücher produzieren, dafür mehr kürzere Denkanstöße. Die erste solche Publikation, der anregende Essay unseres Vizepräsidenten Konrad Hummler, Das Ende der Allmende, Nachdenken über Nachhaltigkeit, haben wir unserem Sponsorenkreis bereits zugestellt. Der nächste Denkanstoß, links, zeitgeistig und machtverliebt, liberale Gedanken zu den Intellektuellen, mit Beiträgen von Tito Tetamanti, Oliver Zimmer, René Scheu und mir ist in Produktion. Sie können die Denkanstöße jeweils bei uns für eine Schutzgebühr von 10 Franken erwerben und sie sind elektronisch auf unserer Website zugänglich. An unserem Büchertisch oder jedenfalls beim Ausgang sollten Sie auch noch einige ältere Bücher von uns zu reduzierten Preisen finden. Darunter meinen Essay "Die Schweiz hat Zukunft", der nach all den Wirren der letzten Monate etwas trotzig klingt, aber nach wie vor gültig bleibt. Ja, und schließlich bleibt mir zu danken den Referenten und Podiumsteilnehmern, vor allem auch dem Moderator, der jeweils den Dank nur weitergibt, den Kräften im Hintergrund, ohne die solche Anlässe nicht stattfinden könnten, und nicht zuletzt Ihnen allen für Ihr Interesse an unserer Arbeit. Bleiben Sie uns gewogen, freuen Sie sich jetzt auf einige Häppchen und einen Schluck Wein sowie anregende Gespräche und kommen Sie danach gut zurück an die Arbeit oder nach Hause. Vielen Dank.